Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that you can use in order to pass your funded account challenges. Now, whether that be with FTMO, Alpha Capital Group, Funded Next, whatever prop firm it is, you'll be able to pass it with this one single strategy. I'm going to give you one dystopian example followed by 3 real life chart examples, and I really need you to watch this video all the way until the end so that you can fully grasp exactly how to utilize this trading strategy. So first of all, this strategy works the best on currency pairs, more specifically Euro USD and GBP USD. Now it can work on indices, but I've found that it works the best on currency. We're going to trade this strategy between midnight and 8:30 a.m. New York time. Now I'm from the UK and New York time is 4 hours behind us. That means if it's a midnight start, that means I'm going to be marking up from 4 a.m. in the morning. If it ends at 8:30, that means I'm going to be marking up 4 hours ahead of this time. So for me, it'll be 4 a.m. and it'll be 12:30 a.m. But the reason I've got the New York times on there is because I know a lot of you guys are from New York or you're from America. So it's easier for you to understand the New York times than it is the UK times. But again, I'll give you more examples of this as we progress in the video so that you're not confused. So when you first come onto your charts, you're going to take a horizontal line and you're going to place it at exactly midnight New York time. Next, you're going to take your vertical line again and you're going to place it at exactly 8:30 a.m. New York time. So within this time, there's going to be all sorts of price behavior. Price is either going to be going up, down, left, right, side to side. It's going to be doing all sorts of things, right? We're not worried about what happens within that time. We are going to be trading after this time. So once all of this has happened between midnight and 8:30 a.m. New York time, you're simply going to come onto your charts and you're going to identify the highest point of that range. And then you're also going to identify the lowest point of that range. So the highest high and the lowest low within this range between midnight and 8:30 a.m. New York time, you're going to identify with a simple line. Once you've done that, you're going to sit on your hands and you're not going to do anything until you either get a sweep of the high or a sweep of the low. So let's say, for example, price then comes up, does its thing, blah, 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 and then we get a sweep of the low. Once you get to sweep of the low, you're then going to drop down to the 1 minute, identify a 1 minute market structure shift, and then you're going to take the trade in the opposite direction. So if we sweep the lows first, we're going to be looking for buys. If we sweep the high first, we're going to be looking for sells. Now, as we can see, we get a market structure shift right here. And then from there, we're going to identify the fair value gap which caused that market structure shift. And then we're going to simply take our entry right on that fair value gap, stops below the low, and then you're just going to target a 1 to 2. So that is the trading strategy in a nutshell. Now this is a dystopian example. I'm going to give you some real chart examples so that you can understand it a lot better. And again, I need you to watch this video all the way to the end so that you can really understand how to utilize this to pass your funded account challenges. Guys, I'm sure by now you've heard that Bitcoin has just crossed $72,000 and it is a great time to be invested in crypto. However, the number one thing when it comes to being invested in crypto is being on the right platform. This is where I want to give a big shout out to Cryptonomy because these guys have such an incredible platform that I really just want to showcase. Now, first of all, they have an incredible UI. It's so easy to navigate where even somebody who has no experience in crypto is able to jump on here, create a wallet, create an account, and get straight into investing. Number two, and this is the biggest point that I love the most, they are fully regulated. Cryptonomy operates as a regulated financial entity adhering to both European and international financial regulations. That is such a big thing. Number two, you have complete security. Cryptonomy ensures absolute security for client assets backed by a £3.7 billion insurance. Now that in itself is a statement. So let me show you a few of the features that Cryptonomy offers. First of all, you've got these interest accounts. Now these are really good because if you have crypto lying around that you're holding for the long term and you want to make them work harder, then you stick them in one of these interest accounts and it's going to pay you dividends, right? So if you have Bitcoin sitting around that you're not using, that you're planning to keep for a very long time, then you stick it into this vault and then you're going to get 24.72% APR. So whilst we're here, I'm not planning to sell my Bitcoin anytime soon, so why not deposit it into one of these interest accounts? So if we hit deposit, then we can pick what crypto it is that we want to add into. So for me, it's going to be Bitcoin. I'm going to put all of it in there. We hit continue, confirmation, so we're depositing 0.0075 Bitcoin at an APR of 24.72% interest. We hit deposit and that's it. It's as easy as that. Now with the fixed interest, if you deposit Bitcoin, you get up to 153.8% APY. Their wallet is super easy to navigate. You simply just click on wallet, it takes you to your current wallet. If you want to deposit, you hit deposit, it brings up your wallet address. You choose what network, gives you your address, click copy, that's it. If anyone wants to send me Bitcoin, feel free. Last but not least is just as easy to exchange. So say for example, you've got Ethereum. Ethereum has just hit $2,700 and you're thinking, let me take some profits. Put how much you want to exchange, choose what you want to exchange it into, hit exchange, and the request is sent. So if you guys have crypto and you're looking for a reputable place to store them and make some good interest and APY, I'm going to leave all of the links down in the description for you to be able to earn all of this crazy APY. So click the link down in the description, go and check out Cryptonomy for yourself. You're going to go through the website, you're going to love them, and you're going to sign up. Right, so here we are on GU on the 15-minute time frame. We've come onto our charts and we're going to identify 4 a.m. in the morning, and we're going to put a vertical line there just like that. Next, we're going to identify 12:30 p.m. and we're going to put a vertical line just like that. Now, once we've done that, we're going to take our horizontal line and we're going to simply mark out the lowest low of that range, and then we're going to mark out the highest high of that range. So this is the lowest point, this is the highest point. Now, all we're simply going to do is set an alert right here and an alert right here for price to cross through. If price breaks to the upside, we're then going to wait for a 5-minute market structure shift, and we're going to take price in the opposite direction. On the flip side, if price comes down and we sweep the lows, then we're going to wait for a 1-minute market structure shift, and we're going to take buys in this direction. Now, if I play price on, we can see that we get a sweep of the high. Now, once we get a sweep of the high just like that, our alert has gone off, we've come back onto the charts, we've dropped down to the 1 minute, and now we're simply waiting for a 1-minute market structure shift. Now let's identify a structure. We've got higher high, higher low, higher high. Therefore, in order for us to get a market structure shift, we need price to break below this low right here. So we're still not in this trade. We're not interested in getting into this trade until we get that market structure shift. We're going to identify the fair value gap which gave us that market structure shift. We're going to take our entry at the open, stops go just above the high, and we're simply targeting a 1 to 2. Now, once we've got our trade like this, we then enter it into our trading terminals and we simply let price do its thing. And as we can see, price taps us in and then eventually it goes ahead and goes straight to the take profit. And just like that, we've hit a 2% gain on the account. So here we are on GU on the 15-minute time frame. Now I really need you to watch these next 2 examples because they're really going to show you exactly how to spot a fake market structure shift and also how to stop going break even so early when price takes you out and then goes to your target anyway. So what we're going to do is come into our charts and identify a 4 a.m. in the morning with a vertical line. Then we're going to come over and we're going to identify 12:30 in the morning with a vertical line. So once we've got this, we're then simply going to identify the highest high and the lowest low of this trading range. We're then going to set an alert at the high and the low, and we're going to wait for price to sweep either side of this liquidity. So we drop down to the 1 minute and we're going to wait for our alert to go off. And as we can see, we get a ping right there to say that the market has just swept the high. So now we're waiting for a market structure shift in order to get into any positions. To identify structure, we can see that we've had a higher high, higher low, higher high. So now we need to break this higher low in order for us to get a valid market structure shift. So until then, we're still sitting on our hands. And as we can see, we then finally go ahead and get this market structure shift right here. And price blows through this with lots of intention. We get massive impulse out of here, which means this trade is most likely going to be a good one. So what do? We identify our fair value gap, which gave us that market structure shift. We then take our entry at the open, stops go just above the high, and we simply target a 1 to 2. Once we've done that, we then enter this trade into our terminals, and we're simply going to wait for price to come back and give us an entry. So then eventually price comes back, gives us an entry. Now, you see how price came in with all of this impulse. A newer trader, as soon as he sees this impulse away, is then going to want to go break even. Now, if you go break even this early, it's going to be detrimental to your trading because what is price going to do? Once price has an impulsive move, it tends to have a cool off, a retracement, and then it continues in its intended direction. Now we can see that we've got a massive fair value gap right here. If you was to go break even this early, price can easily come back to this fair value gap to mitigate it and continue down, but it's going to take you out when it comes back in that retracement. So it's best to always wait for price to do its thing. As we can see, price has now come back to mitigate that fair value gap. Now, had you gone break even, you would have been out of this trade. And then if I play price on, we can see that after a while, price then does decide to go and hit our take profit. But had you prematurely gone break even, you would have not made any profit. So you have to understand how price behaves, where if it has an impulsive move, it's going to want to come back and retrace before continuing that move. So with that understanding and with the understanding of structure, it gets much easier to get higher quality trade setups. I am actually having a 20% off Halloween sale, which I invite you guys to join. If you join my Telegram, and the link for this is down in the description below, you'll be taken to this page where you can see I'm having an amazing 20% off Halloween sale where you can join the VIP group. Now inside of the VIP group, you get my daily trade setups, daily futures live streams, weekly outlooks, end of week market outlooks, picture trade ideas, full support system. You get everything that you need in order to become a consistently profitable trader. And again, a massive 20% off for Halloween. So if you aren't part of the Telegram, then click the link down in the description. And then from here, you can click this link where you'll be able to get access to my VIP group. And don't forget to enter the code Halloween in order to get 20% off. So here we are on the last example, and this is the one that I really need you to watch so that you guys can understand how the markets can trick you. So again, first, we're going to come onto our charts and we're going to identify 4 a.m. in the morning with a vertical line. Once we've done that, we're then going to identify 12:30 p.m. with a vertical line. Then we're going to take our horizontal line and we're going to identify the highest point of this range. And we're also going to identify the lowest point of this range. Once we've done that, we're now going to set an alert here and up here. And we're going to go about our day and we're going to wait for the alert to ping to tell us that the market has swept liquidity. So now we've gone off about a day and the alert has pinged. And it said we've now swept the lows. Now once we've swept the lows, what are we going to do? Identify our structure. Now you see most people come into the charts and they will say that this is our lower high and lower low, right? Now in some cases you may be right. However, for me, I would classify this as consolidation as opposed to a structural point. Now the reason for that is because it didn't really do much, right? We had basically a sideways market and then we had the push down. Same as right here, same as right here. That's just a consolidation on the lower time frames as opposed to being valid structure. So for me, this isn't valid structure. And this is where a lot of traders can get caught out because they don't understand the difference between actual structure and just consolidation in the market. So first of all, let's say a new trader has identified this as structure and they've seen, oh look, a market structure shift. Let me identify the fair value gap which caused the market structure shift. Let me take the position right here, stops below the low, and target a 1 to 2, right? So a new trader has done this without the understanding that this is consolidation in the market. And what happens? Price takes them out. This is because the trader did not understand that this is not valid structure. This is simply consolidation in the market. Now, if you guys don't understand the difference between normal structure, consolidation, multi-time frame structure, then I would highly recommend clicking that link down in the description to join the VIP, where you can get access to my full A to Z trading course, which teaches you everything you need to know in order to become a consistently profitable trader. But here we are with our structure. So now we can see that this is a lower low, lower high, lower low. Now we've got valid structural points. We've broken this low. So now this becomes our highest lower high. Now we need to break this lower high in order to get a valid market structure shift. So now we wait for that, and now still price is not broken above it, which means we're not entering this trade. And finally, price goes on and gives us that market structure shift. So once we've got that market structure shift, we're going to identify the fair value gap which gave us that market structure shift. We're going to enter at the open, stops go below the low, and we're simply going to target a 1 to 2. Once we've done that, price comes back, taps us in, and you can see immediately we run straight to take profit. Now it's key that you understand exactly what went on right here and how you can avoid considering consolidation as structure. But once you understand this, your win rate will go higher and you will take much better quality trades. So that pretty much wraps up this video. I hope by now you have a full comprehensive understanding of exactly how to utilize this strategy. Now, if you enjoyed this video, then don't forget to leave a like, comment, and subscribe. And on that note, I'll catch you guys in the next video.